Let's dive into non-recourse loans a little bit. I'm Tim Diesel, I'm a commercial real estate consultant, and today I want to talk about non-recourse loans. I have discussed this multiple times, but I am receiving a lot of questions and I do want to answer them. And I am creating an investor's toolkit. So anytime you guys have questions and you want a template of something, so many of you have asked me for a template of my letter of intent. So I'm going to put that on the toolkit. That will be in the description link of this video. It will also be on my website. And you can go on there and check that out. And as I get requests to add more resources, I'll definitely do that. I want to give you guys all the tools that I use that I think you'll need. Now I use a ton of different things. So I don't know what you're going to use, and I don't want to overwhelm you with a bunch of documents that you really won't even need maybe in your career right now. So if there's anything you need, if you guys send me a comment, an email, whatever it is, if I can get that to you, I'll definitely do it. Just try to make things easier for you as we go along. So non-recourse loans, basically the concept of this is you're not on the hook for anything, all right? So let's simplify it as opposed to non-recourse loans. Every loan is a recourse loan unless specifically a non-recourse loan. So use this concept of if you have a credit card, a car loan, a house loan, whatever it is, every loan has some kind of recourse for it because you're personally guaranteeing the loan, all right? So if you are going to buy a building, and let's just say it's $100,000, and for whatever reason, the building doesn't work out according to plan, and you fail to make the payments, and then the bank says, okay, you've defaulted. Now, in a recourse situation, they can come after you or the person who personally guaranteed the debt, right? Just like a credit card. If you don't pay your credit card, they will come back and they can sue you, they can do whatever. Most of the time with a car loan, I haven't seen very many cases where people get sued because they just repossess the car, they ruin your credit. In a building, same thing. The problem with a building though, sometimes it could be a couple $1 million and they only recouped half of that maybe. So they do have the opportunity to go back after you and whatever else you own. So if you own $5 or $10 million worth of stuff and they have you personally guaranteeing debt, they will come after you. Now, in cases where, let's say you're buying an office building, and let's use easy numbers, let's just say it's 100 grand, 100 grand office building, doesn't matter how much it is. If there is no recourse, in essence, you're basically giving the bank the keys back, right? You're just giving the keys and you're walking away. That's the image that I want you to think of. So if you have partners going into the deal, many times they'll ask you, is it a non-recourse loan? Now, the truth is for an investor, maybe they're a silent partner, maybe they just want to put some money up. It doesn't hurt them. They're never going to go after their credit, right? They're going to go after the person who guaranteed the debt. So you could have 15 people on the deal. It doesn't really matter unless the bank gets them to sign. Now, the bank wants as many people to guarantee the debt as possible. If they can get 5 people, they want all 5. It doesn't even matter. They want security, right? Banks really aren't, they're not in a risky business. They want to lend, but they don't want to lend like that. So depending on the deal, depending on the structure, depending on you, most of the time, I have never seen a bank say this is a non-recourse deal. Very, very rare. I've had to ask for it, right? I've had clients, I've had to instruct them to ask for a non-recourse deal. Most of the time, they don't just offer that sort of thing. If they do, it's generally lower loan to values. So you're going to get 65% loan to value as opposed to 75% if you were to personally guarantee it. So now there is some good and bad to doing these loans. And of course, I have expressed these so many times, but I just want you to understand non-recourse means you're not on the hook for anything. So if you're doing a deal, I always say whether it's recourse or non-recourse, it shouldn't really matter. It should be a good deal. You never want it to go bad, but it's good to have that in your back pocket just because if everything goes down the tubes, you're still kind of protected there. So I hope that answers a lot of questions for you. If there's anything else, please let me know, and I'm here to help you guys out. Thank you.